All right, let me go back then for the recording, for the purpose of the recording. And I think it'll help as a review anyway. Okay. So basically, our objectives for today is to try and read the chart. We want to look for signs of weakness. We want to figure out what they mean and how supply and demand plays a role. And I'm going to hopefully try and get you to have one clear VSA principle in mind. Roy, thank you so very much for asking that this be recorded. It would have been terrible if we had gone through all of this and we had a great back and forth and we weren't able to have a record of it afterwards, so I thoroughly appreciate that. So the supply and demand in pure economics states that as the price goes up, the demand for a product, if the demand is high enough, people will pay as much as they want. And in the case of Uggs, Uggs have been very popular and yet very expensive for many years despite our down economy. And yet every single girl that I taught over the last 3 years in high school wore a $200 pair of Uggs. From the wealthy girls to the poor girls to the ones in between, they all had Uggs. Sign of status probably. Also peer pressure, you all want to look like your friend. So part of that plays into it. But the demand for Uggs has increased, which is the only reason why I chose this. I don't know if any of you adults actually wear Uggs. Fiona, you're so funny. Come to Australia. They are much cheaper. Well, thank you, Fiona. Maybe I will. So the price is up here. And the reason why I use this is because this is the natural law of supply and demand, but the smart money is going to do the opposite, and I'm going to show you that, okay? So basically, in a rising market, you're looking for huge amounts of volume to appear. That volume is these selling orders. So basically, selling orders come in one after another after another. Smart money is selling into this rising market. They're going to short early, and you're going to look for the opportunity to short after that, okay? So basically, the signal is often that climactic action or supply coming in or buying climax. Those are all signs of weakness that you will see. This is called the distribution phase or the selling phase by the smart money. Again, in a rising market, they are trying to sell into this rising market, short, so people will misread that and go long. Okay, so don't be a herd. Think the opposite. Okay? So these bars, this climactic action, supply coming in, buying climax, they're going to have ultra-high volume. Again, these orders are coming in one after another after another. The spread is massive or wide, very wide. The close is going to be mid to high because they're selling and buying there. The hardest thing is to determine how much buying and how much selling. So use the relative volume to help you. But this volume is basically saying, ooh, look at what they're doing. They're starting their distribution phase. It's coming in one after another, so we have a lot of volume and a lot of spread because there's a lot of activity there. We're doing it in a rising market because they're selling before we do. So that's why you see it, let's say at 9 or 10 o'clock on a, if you picture in your mind the clock, you know, at the 9 or 10 arm, that's where they're selling. We want to wait until 1 or 2 or 3 o'clock to confirm what they did at the 9 or 10 o'clock, okay? You're basically waiting for it to mushroom over. You need evidence, and that's what we're going to show you today. So the trend is going to be up or rising. The close is mid to high, the spread is massive, and the volume is ultra high. All right, an up thrust. This often follows this climactic action, this supply coming in, this buying climax. It is an up bar. Okay, and it's going to be higher than the bar behind it. It's basically thrusting up into a new high, into a fresh new ground. If you're not sure if it's into a new ground, then on RT, we basically, in most trading platforms, you can go 20 bars, 30 bars, 50 bars, 60 bars, etc. So look to your left. See if you can see any high bars behind it, okay, or to the left. The bottom close means that there's no interest in these higher prices. What the smart money is doing is pushing it up, 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 and then they've left the transaction. They're not in it anymore, okay? It's a false way to catch people to go long. It's the opposite of a shakeout. A shakeout is a widespread down bar trying to catch people to go short. This is trying to catch people to go long, okay? It's going to stop them out. It basically drives the price up and then drops it like a brick. You need the next bar down to confirm the signal. But again, if you're thinking about selling and you're thinking about volume equals selling, they've stopped selling. They're not interested. They have no demand or interest in these higher prices. So going back to the example of the Uggs boots, as the demand for Uggs increases, then Uggs, the company, can charge as much as they want. People will pay higher prices because the demand is high enough. So people think that that's what's going on here. And in actuality, the price goes up, the volume goes down. Doesn't make sense. Price won't go up and the demand go down, right? It's the opposite of economics. That's the anomaly you're looking for, the anomaly, try and say that 3 times fast, of supply and demand. And those are our clues that the algorithm of VSA tests for, okay? Okay, smart money thinking. So again, as the price rises, smart money sells into the market to catch the herd going long, okay? As each order comes in one after another, it creates ultra-high volume. When the volume disappears, they have dumped their supply or sold their instrument, and they are not interested in those higher prices. That's no demand. It's both the name of an indicator and it's the name of the theory. Okay, it's no demand, no interest in these higher prices. Okay, so what no demand is, as a VSA indicator, is the withdrawal of interest by the smart money in higher prices. It's an up bar, the next bar down to confirm. Everything in VSA needs 2 bars to confirm. Okay, the next bar down should be down to confirm the no demand. It's a narrow spread. It often looks like this. It could be even narrower than this, and I'll show you a few in a few minutes. The low volume, the lower the better, guys, okay? Because if it's lower volume, it's less and less selling by the smart money. If you get almost nothing, which we'll show you during the European market on the E-mini this morning, it's basically no demand, no demand, no demand, okay? That's a stronger sign. And I'm repeating myself because I really hope that this sinks in, because I want you to think like them and notice these anomalies, and then you'll be able to set yourself up pretty well. So no demand is a confirming signal of weakness. It's not by itself strong enough to take a short. You need weakness in the background, or serious weakness in the background, as Philip Friston would say. You need buying climax, an end of a rising market. You need an upthrust, which is what we were just talking about. You need something like this in the background or to the left to help you determine that what you're seeing is accurate, that what you're seeing is strong enough to enter the trade. Someone had asked about the background. If you see a no demand and you don't see anything in the last 20 bars, go back 30, go back 40, go back until you see it. Otherwise, again, it's not a strong signal. You should be in a downtrend before shorting. Again, if you imagine the way a clock looks and the rising market is on the left side of the clock, they're basically selling at the 9 or 10 o'clock. You're waiting for this to mushroom over. You're now in a downtrend around, let's say, that 2 o'clock, 3 o'clock. And I'm just talking about not the time of day, but literally on a clock, which way your arm is going. It's now gone up to midnight and gone back down again. So when you're in a downtrend, that's implying that the weakness is there. Okay. Rusty asks, a high volume upthrust can be a serious sign of weakness, and the answer is yes, because an upthrust is a sign of weakness. Again, you don't want to trade off of an upthrust because it's basically a middle signal or a middle confirmation. It's confirming that large climactic action behind you, but you need this no demand to prove that you can go in. Okay? And again, the volume is telling you how much selling is left. Now remember, depending on how widespread the upthrust is, Rusty, that means that's a lot of effort to push that up. That means they have to do a lot to push that up, and then they drop it. So the volume is basically just helping you determine how much selling is left. The upthrust alone is a strong sign, but again, you don't want to short right after an upthrust. It's basically a middle confirmation. Okay, it's the opposite of a shakeout. All right, so here is the 15-minute chart. This is the E-mini 15-minute chart today, okay? And I basically labeled these A, B, C, D. So now we have basically to our left or in our background is our 4 signs of weakness here, okay? Notice we have this wide upspread up bar, okay? The next bar closes even. And then it goes up, and then it comes up here. This is no demand. This is buying coming in, supply coming in, excuse me. Then you get no demand here. All right, notice the volume down here is lower than the previous two. In RT, it changes pink like this. All right. I'm sorry, I'm showing you today's market, but this happened on November 8th. My apologies. So basically, you get this huge background bar, the supply coming in. All right. So Jack, I actually just defined it. I can give you the PowerPoint slides, but an upthrust is basically take your left hand and make an L, and it literally upthrusts into new fresh ground and closes on the low. It's a false breakout. It's to try and catch people going long, and it's confirming that there's no demand or very little demand in the market by the smart money. It always follows a large bar like this one. Okay. So we basically have a no demand here, and then we end up going up a little bit more, and what we're basically doing is looking for it to mushroom over, and it doesn't. It goes and it goes and it goes. Okay. Now look, there's absolutely no volume here. This is the end of the day. Okay. Here we have an upthrust. Okay. Now here's a perfect thing. Again, if you take your left hand, it's an L, right? The reason why that's an upthrust is 1, it closes higher than this bar. 2, it closes on the low, so there's no interest, right? They're pushing it up higher, but there's no interest. And then the next bar closes even. If it closes even or down, you're basically confirming this, okay? There's absolutely no volume, which means there is no selling at the moment, so you should be looking to short. Again, I would never recommend shorting on an upthrust. It's usually in the middle. It's usually a middle confirmation, okay? And sure enough, here's your no demand. It's narrow spread. There's no volume, and it's confirming this. So here's your background. You're in a downtrend. You have an upthrust behind you, and you have this, okay? Now watch. Be patient, okay? Go in. Here it is. Wait for it, and then it slices down. Okay, it goes down, 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 way down, all the way down. This was at 3 o'clock in the morning. Okay. Michael asks, how can you have signs of strength and signs of weakness on the same candle? It's not on the same candle. It's right here. This is the bar I'm talking about. You might be thinking, this blue, Michael, actually, let me explain that to you. Maybe this is what you're asking me. This blue is in TradeGuider in our standalone platform. It signals basically a potential reversal in trend. Okay, that's what that is. This right here, why does my mouse always go away? This one right here is actually confirming that it is a new trend and new reversal trend. They're not, again, they're always based on relative volume, but it's very difficult to just rely on that. So that may be what you're thinking. Let's see, Jerry is, what is the significant practical difference between an upthrust and a hidden upthrust? Well, an upthrust needs to be higher than the bar behind it and close on the low. And a hidden upthrust is basically it doesn't reach a new high. It's higher than the bar behind it, but it doesn't reach a new high. So again, a good upthrust is at the midnight section of the clock. A hidden upthrust might be at like, 9 or 10. It's within the rising trend, but it's not high enough. And you need to expect it to go up higher. Oftentimes, too, a hidden upthrust has higher volume, indicating that there's more selling to be done. Mark asks, where would you enter that trade and where would you put your stop and profit target? What a great question, Mark. I was just about to answer that. Okay, so again, the reason why I like this bar is you have huge weakness here in the background. It's mushroomed over. It's starting to come down. You're in a downward trend. You have an upthrust here. Okay, I'm on little volume. I typically wait 2 bars because especially if you have this, you want the next bar always to confirm this bar. Now watch. This is the one problem with this, right? Notice that it turns white because the next bar closes slightly higher than this one, but we're still well within this range of this upthrust, right? See? It hasn't really broken this upthrust. Okay? Now watch. Look what it does. One more time it goes up to try and catch people to go long, closes down near the lows on almost no volume. Okay? You could put your stop, you could, if you wanted to go in after this, I think Gavin would probably go in after this, If you wanted to go in after this, right, you would probably put it above this bar, because if this is going up, you want to go in. I typically wait 2 bars. Okay. You can't see the volume on the chart. There isn't any volume. That's why, Ian. It's literally there isn't any. It really is there. It's minuscule. There isn't any. Okay. That means 0 volume or no volume or whatever. Okay. So basically, you have this widespread down bar. I would go in right around here. I would put my stop up here above this so I don't get caught. Maybe 1273, and go in on this bar. Okay. Basically, look at what this bar does. It takes out the bar over here, right? Again, there's no volume. Okay, so, oops. All right, so it followed an upthrust. That's why it worked. It's in a downtrend. You have serious weakness in the background. You have potential buying climax 3 times, and there's no volume. Okay. Let's see. Jackie asks, I'm a little confused that you indicated this chart had weakness in the background. I was ascending to why is it a weakness? Okay, excellent question, Jackie. It's counterintuitive, and it's basically VSA 101. Weakness appears on an up bar. So that makes no sense, right? But really what you're basically trying to say to yourself is, okay, if I'm a smart money person, if I'm professional and I have millions of dollars behind me and corporations behind me, I'm basically going to sell in a rising market so I can trick everyone and think that it's going to continue to go long. Now, the smart money is going to go first before we do. So in this rising market, in this uptrend, this is why you see little red diamonds in an uptrend. Okay? Notice this massive volume and this massive widespread up bar. That's our first sign of weakness, potential selling climax, okay? This could be the start of the distribution or selling phase, okay? And basically, you get a no demand here, volume lower, and then it goes up, big spread, it goes up, up, again here, and you have climbing, you have more selling left to do. Notice the volume here. A lot of selling is left, right? So basically, this becomes our background or our left or our confirmation, and you want to wait. So you wouldn't want to sell here because you're not in anything. Oftentimes when you're up near this market high, it's trying to catch you. See, notice how this went up slightly? And then it whips sideways. That's what it wants to do. And whip sideways, sideways, sideways. We get a sign of strength here. Sideways, sideways, sideways. Again, we now start going into this trend, and it's not until we see this up thrust here that we know that we're confirming our trend. Again, you don't want to go in on an up thrust. An up thrust is a perfect sandwich signal. It's in the middle. And then basically this is your no demand. Okay? Let me see. Fiona, it's a sign of weakness coming. Yes, this over here is a sign of weakness coming, right here. Okay, this little bar is telling you, but you've got to wait. See, you're in an uptrend. They're going first, then it's your turn. Let the smart money go first, then you go. Okay? Right, Danielle, this is Econ 101, right? If you have anything to sell, you always want to get the highest possible price, not the lowest. Exactly. So if you think about it this way, the reason why they're called market makers is because they're going first. Okay, so they're going to sell as high as they can and buy as low as they can. That's not our job, that's theirs. Let them do it, wait for confirmation that it's happened, then you go in. Okay? The upthrust is not bogus, Rick. It doesn't matter what time it comes in because you got to remember it's midnight my time, but that's, you know, it's going on. The market never dies, right? It doesn't stop. So Alan asks, sorry, these questions are all mushing together. Alan says, right. You can always hover over this. It'll give you the actual volume. I think someone asked that. This is a screenshot, so I don't have the active RT platform up. But you can always look. It'll tell you what the volume is. It'll tell you, you know, see here, high, low, close. Okay, open, high, low, close, volume. Okay. All right. I hope this helps. Okay. All right. So again, this is why it worked. It followed an upthrust, which is your perfect sandwich signal. It's in a downtrend. You have serious weakness in the background. We have potential buying climax 3 times, and the volume is gone. Okay. All right, now I got confirmation. That was a 15-minute chart. This was a 15-minute chart, okay? Now look at the 30-minute chart, guys, all right? basically we have this huge bar coming in. Okay, we're in an uptrend. Look at it go up right here, market top, and it sort of slips sideways, slips sideways, slips sideways. We get signs of strength right here. Okay, now B is your no demand, or sorry, B is your no demand. Look at there's no volume. This is actually called a trap up move. I'll repeat it, a trap up move. Okay? Going to explain what this is. So we had no demand, we had an upthrust and no demand in the 15-minute chart. Okay? In my 30-minute chart, I have a trap up move. Okay? Now, it's hard to see because of the diamonds. This bar is blue, it's up. Okay? Basically, it just turns right. It goes up and turns right. Okay? That's my up bar. See? The next bar closes widespread down, closing near the lows. All right? You need 2 bars for this to confirm. This is your trap up move. Okay? All right? The other thing, unfortunately, because of the diamonds, you can't see, it's slightly higher than the one behind it. So it pushes up, closes low, widespread down bar. Literally, the word trap up move is trying to trap you to go long. Okay? Now, literally, you want to pay particular attention to the background. We have a period of rising prices, and this could be the start of distribution by one or more of the professional groups. Okay? We have sign of weakness back here, okay, on a good, decent-sized volume here. Sign of weakness there, right? Yes. I have my background confirmed, okay? Now, the volume is ultra low, which confirms this or makes this even stronger, okay? So again, this is the trap up move. It's a 2-bar confirmation. You don't see it very often, guys, which is why I wanted to show it to you and point it out kind of blow by blow. So again, you have an up bar here. This bar closes up above this, widespread down, closing on the low, very low volume, weakness in the background. I've basically proved what it's asking me to do in this, okay? So it basically says, be cautious if the volume on the down bar was very high to ultra high with the next bar up. This would confirm this buying. Okay, but we basically have low volume down bars show lack of selling. This could lead to a strong rally. Now again, it's midnight, right? So oftentimes the volume is lower than anyway. I need to keep that in mind. It doesn't mean that you disregard the signal. It means that you keep it in mind. It means that you keep it in the back of your head, okay? So the trap up move, again, is based on 2 bars. The first bar closes up off the highs. The second is a widespread down bar closing near the lows. The second bar high is higher than the first bar, tricking people into going long. Okay? Since I have low volume or no selling and weakness in the background, it's a strong sign of weakness and can lead to a strong rally. This is not to say that you're definitely going to short it at this absolute moment. What I wanted to show you, though, is that I got my confirmation, essentially, my 15-minute no demand here, right? I got it in my 30-minute here. So they both confirm each other, okay? Okay, everyone's asking me the same thing. I thought I answered it, but I'm happy to answer it again. At midnight, volumes are typically lower. Again, you don't use this as, oh my God, this is the best sign I've ever seen, let me go short. What it does is, if I'm seeing it on a 15-minute, I see an upthrust, I see a no demand, 2 very strong signs. On virtual volume, no volume, right? I have serious weakness in the background. I need a few bars to confirm. Okay, same thing here. I have serious weakness in the background. I got this false trap up move. Okay, all of these things prove all of this is true. That's why I put check marks here. Basically, what I do is I read the dialog box and I check if I have it. Okay, so I'm not telling you this is where you're shorting. I'm just pointing out that this is what you have behind you. By the time this no demand on bar C appears, okay, look at what you have behind you. And then it falls. It collapses, okay? Steve, I think this is a good time to bring you in because I think this is precisely at the time that we were talking earlier. So I'm going to change you as a presenter. Do you want to use my RT or yours. Probably should use yours. Let me see. I gotta find you first. Okay. All right. So let me unmute you. Okay, you're unmuted.
Okay.
Do you want to use mine or do you want to use yours?
Well,
Because I think I can change the presenter and make it you. Would it be easier to use yours?
yeah, that way I can point around, because what I'll do is I'll start spraying over the mic chart.
Okay. All right. So let me. Wait, how do I do that? Don't I click on you and then?
Well, actually, just right-click on my name, and am I still on the list? I believe I'm
Okay.
an organizer yet. You just have my mic open.
Just okay. Just make
So right-click on my name, and I'll say make a presenter, and I'll have the ability to.
Okay. Is it working? Is it starting to?
It's getting there. Actually, go ahead and right-click and make me an organizer as well.
I thought
I can't control the screen. I guess it's just a presenter.
All right. Hold on. But you just went away. Now you're not an attendee. So now what do I do?
Yeah, I'm on the organizer side. The tab to the right.
I don't know how to do this. Okay. Oh, wait.
You see the attendee list, and then there's organizers right next to it.
Okay. Yep, I got it.
Yeah.
And then.
Right-click on me.
Okay.
And make me an organizer if possible.
Okay.
There we go. And some things changing. Screen.
Okay, I got confirmation that you're the presenter.
Great. And you can see a blue screen. So I put it on the bottom.
Yep.
There we go.
Okay, good.
And the question was about the hi, everyone. I'm Steve Phillips. Some other questions here. Crowded house here. Another one. I was breaking it down because there was a lot of questions about the overnight volume, and you see the low volume up on right here. So what I did is I shrunk it down to within the session itself. So back to the subject at hand now. Oh, you can't hear my sound. Is it extremely loud? Muffled. Okay. Can you all hear me okay? Check 1, 2, buckle my shoe.
What if I mute myself? Maybe that'll help, because sometimes when both
I can. There you go. Yeah, I can hear you in there too. Good deal. Okay. I didn't want to blast y'all. Good deal. Good afternoon, Butch. So we had a discussion about having it break through some support level. We had some support back here, which I was actually interested in over the overnight session when I first woke up. I actually took a peck at it, but that's the way when I see accumulation phases in the background and some support, I look for that. But as soon as this broke through and started to bump its head, because it broke through these levels down here, this widespread down bar, and kept pushing through, Well, it was time to start looking for no demands for it to roll off. And as soon as you start seeing no demands come in after the bottom of this bar at 1252 level, there's a bunch of trapped in people as it floats down. Is, you know, there was a block of orders here. People peck away at it. They slowly get trapped. So this downdraft is kind of torturous for people that are really stuck in this. And they shake them loose and shake them loose. Comes back up into this area. And that's the the highest probability area. I was really looking for at 1252, 1255 level. It took off, so I had to wait. As it rises up, then you can start hitting it some more. Does that make sense? Okay, the question is, what would be your trigger? How do you know how long to stay in the short? Alan was asking exactly where did you take the trade. I was actually trying to peck away at it long, trying to find some climactic action. But as soon as it broke through this level here, I knew that this is a serious sign of resistance now. So as soon as it starts to break down and go back up and come back into these levels at 1252, no demands and up thrust within this area, and then followed by a failed bar would be areas to start entering your short. Specifically because we broke back through here, and we have a narrow spread, high volume up bar into the close from yesterday. Yeah, you have to be patient and wait for the right setup and the right opportunity. Aggressively take the conservative setup. As soon as you see the distribution in the background and the effect and the actual result of the failing here. So you have a bit of a cause back here, and there's some campaign going on in here. So there was a block of orders at one point in here that helped move it. And they brought it right back down in there. So there was actually no orders. They all got cleared out. All the shorts got cleared out yesterday. They changed hands. Professional money said, okay, well, we'll take the shorts. We just squeezed you out. We'll take your shorts, and we'll go ahead and cover them down here because we know we have a big block of orders. Well, there was a block of orders that they were campaigning with here to help squeeze the shorts out. So in this area, there was a possibility there was another block of orders here. So when I saw it crash through, I said, wow, I better back off. So I actually hit it long a couple times successfully, but I play it real tight. And as soon as it broke through, it started coming back up 1252 level, 1256. I was really anxious to get short up there, but anxious meaning conservatively waiting for the setup. Yes, Rusty. Always looking in the background where the order lots of orders may be, and where the professional money is playing their games. So they were able to have enough blocks of orders in this area to run it up and squeeze the shorts out, take their hand, and they just transferred the money. Now, because there's a block of orders in here, did they really mop it all up? So that's what I was looking for. And then as soon as it broke through here, you had the opportunity to get it. Now, because it broke so wide, if it started rising back up into these levels at 1264, so that'd be a good opportunity as well. But unusual, it just really pounded down. So this is a pretty volatile extreme. So we got. Yeah, exactly, Blake. What did you find missing in the setup? Price market trade manager. 24-hour session as opposed to just regular day session. Yeah, looking at the overall picture, look at the forest, and then hone into the intraday stuff and look at chop down the trees. But you always have to keep the big picture in mind. So let's see. 1128, you found, saw an end of the rising market line. Good job. Sam asked what time frames I look for blocks of orders, and I like looking at the hourly chart. It's real clear to me, but I do break it down from 5, 15, 30, and 60. But I do look at the weekly, daily, the overall time frames to look at everything as well. The 1250, the no demand right here, coming in at 1249 and a quarter. And then it failed. So, the breakdown of this 1249 and a quarter. Something I teach in the room, when all the diamonds are turning red all the way down across the time frame, start looking for retracements, but understanding where we're at in the phase. So if we broke through this level down here, because we broke through these levels, it makes it a go-ahead to start shorting into the downtrend. Y'all are active. This is good. Very inquisitive, inquiring minds there.